So the big question is this: how do investors like us who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings in retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. Awesome. All right, well, there's your first day, guys. That's that. Super fun stuff. Something kind of interesting today. We taught, this sociology class, which was super cool. And as I test my way home today, I'm sure going to have to enjoy the principles of people and society. But something kind of interesting came up. When they talk about rules, right? And using rules as sort of a foundation for social principles and how they come to be. And, it gets you thinking about a lot of things, in the market with circuit breakers. Those kind of rules that govern stocks, right? So although you might have control over parts of your investment, a lot of the time you're going to be governed, especially with 9 to noon stocks, when you're trying to trade those with certain percent gains for the day or gappers. Anything you do is always a little bit difficult because if the stock goes up, 15, 20, 30% in the first 10 minutes, 20 minutes, 30 minutes, hour of trading, the stock gets halted by the SEC, right? So they stop all trading on the security just because it went up too much, the speculation, and now they want people to chill out and really consider the actual underlying value of the company. So when you're trading, what this means for you is essentially it's called a circuit breaker, and what will happen is you can be in a position, you can buy the stock or short it, just depends. And after you get in the position, they'll actually just stop trading once there's a certain level that's hit by the position, just based off the percent change. And so that percent change, also, to tell you guys a little bit of what it was like working a minimum wage job when I didn't really know too much about investing, and especially when investing just wasn't something I thought about. Because now looking back, it's just such a surreal sort of visualization experience for me, because when I think about it, all the work I was doing, I was working a minimum wage job, which was awesome, right? I loved it. It was really great for me to grow as a person. It was a very tremendous opportunity. But when I think about financially what I was doing, just saving all of the money I made, it makes me realize that there were a lot of really, really great opportunities. But a lot of those opportunities just passed up because I didn't really have the knowledge or the experience or the expertise to know what I was talking about and know what I was doing with investments, which sort of sucks, because the deal with it is, the market was really hot the year I was working there, which, if you're looking back now, it's who cares, right? The market goes up 20, 25%. It's really, really great. But in the long term, it's long-term stuff. So it's just something to think about, though, because you got to understand the profound impacts it has on compounding long-term growth investments, right? So investments where originally you might be working just for yourself, or you have to really get on the grind every single day, which is totally cool, because what you're doing is you're saving up for your long-term retirement future, which is absolutely killer for you as a person, because what you're doing is putting in the work up front, and then you're going to reap the rewards later through second-order consequences. They're going to take your life and your lifestyle and your quality of retirement or any savings goal you want to meet to the whole nother level, because you're able to put the work in up front, and then all you do is take where you're at and then get to where you want to be by setting goals mentally, and then using the immeasurable power of the long-term American economy to take you to that next level of personal growth and development. And it's really, really interesting, because when I was working, I would just save my money. I didn't realize that every single year, the value of the dollar that was in my bank account coming from my job was worth about 2% less than the year before. So just by having cash, it felt great because you're accumulating it. But at the same time as you accumulate, well, you have to remember that it's constantly decaying, because the federal government is printing away your purchasing power. It's printing away the cash every single day through the treasury system, which sucks, right? It's not a good system, because they just have total control. The Fed has total control over monetary policy and how they print money as they see fit. So because of that, they've targeted about a 2% annual rate. That's what the board says, what the chair says. They target 2%. recently and for the coming decades, which is awesome, right? It provides consistent economic growth for America, and also, internationally with trade. It gives us a very stable valuation, especially considering that, many foreign currencies are benchmarked off the US dollar index. So the value of the US dollar is very, very important in terms of long-term, large-scale economic play, because without that constant deflation, you don't have any incentive, to spend or whatever it is, because the government's definitely going to print money, and then they try to get rid of it at the same amount. But it's the magnitude of literally sheets and sheets and sheets of paper, trillions and trillions of dollars, and a lot of the time it's digital, right? So you don't even see it. It's just a number in some imaginary bank account with no minimum or no maximum account balance. It's like the Fed literally has a bank account where in a normal bank account you would have to, if you write $100 check, you have to have $100 in your account to give that check validly to somebody. But with the Fed, it's like they have a bank account with no limit, so they can write a $100 check to whoever they see fit, and it doesn't really matter how much money's in the account. They could have $8 in their account, figuratively, and all of a sudden that check goes through, passes, it just creates new money in the economic system, which is what in turn drives down the value of individual dollars in the economy, since those are obviously going to be in more abundance as they print more stuff out. So it puts that single questioning drive on exactly what individuals and their savings and retirements are worth in the economy if they leave them in cash or in other low-bearing securities like CDs or treasuries, where you can get like 2%, 3%, but those percentages are so ridiculously small compared to both inflation and also the potential of average long-term compounding equity asset market returns in the American economy. And it's ridiculous, right? Because you think 2%, okay, so if I can get right now treasury rates are 3%. If I can get a 3% return on a treasury, I guess that means I have a net 1% gain. So if I put in $100, well, I guess the treasury ought give me an extra dollar out in purchasing power, which makes sense, But then you think about like the true economic value of that and the very strangely but often unrecognized value of the opportunity cost in any given dollar for any situation, right? So these dollars, right? I mean, obviously you can spend them on whatever it is that you want in a capitalist society, buy stuff, makes sense. But the true cost comes when you think about the investment potential of any given dollar, especially considering long-term growth in the economy, where you literally put your money in what's called like an index fund, right? Just a collection of stocks. And you have this huge collections of stocks. It is historically proven extremely safe because you've got hundreds and hundreds of companies that diversify whatever it is that you're investing in. So instead of having your entire stock portfolio based on like one or two or 10, 20 stocks, you've got hundreds and hundreds of these things that are historically benchmarkable based on large financial corporations that dictate which stocks should be in the indices, and those indices are constantly put together to have the best quality stocks that they can, so that they can have the best quality index, the best quality long-term returns, because that's what they care about, and it's what matters, right? That's what matters to investors, is having those quality returns that come out of a solid foundation with companies and fundamentals in the stock market. So you look at that, and those funds, on average, across the major indices, it's like basically 10% a year, okay? Now, if you put $100 in, you get 10%. That's $10, all right? Whoop-de-doo. But if you look at that in the long term, and you look at the immeasurable compounding value of that in the long term, suddenly your $1,000 is $10,000, $20,000, $30,000. It all just depends on time and the impact that any given investment that you make will have on your percent return, right? Because you have years and years and years to grow your portfolio, those years and years and years are going to add up. 10% one year, $100 or $1,000 to $1,100. 10% the next year, you're going to add $110. 100% the next year, you're compounding every single year so that the new money that you make makes you more new money. And then instead of just your money making you money, it's your money making you money, and then the money you make from your money also making you money. And that just repeats over and over and over. And you can leverage that immeasurable power in the market, because the deal is, if you leave it in there long enough look at long-term indices, that's how people turn their $1,000 into tens of thousands of dollars, $100,000. All it is time, and then they just stick it in index funds, and it literally they don't touch it for years and years and years. All you do is leave it in very, very simple, optimized and constantly analyzed index funds that are maintained by these massive, financial firms that take care of your future. They take care of everybody's futures by establishing and maintaining these high quality funds, right? So you look at that, you look at just buying it. That's when a lot of the discipline change comes in, because instead of working at an individual level or thinking about how you're going to change your positions based off market conditions, literally all you do is develop the discipline and acknowledgement and care to just leave the cash in investments. All you do is leave it in the fund, in the market, and you can go decades, 50 years without touching it, right? I know a lot of people are starting to retire now because all the assets that they have are worth so much, right? All they did was buy the S&P 500 index fund. All they did was buy the NASDAQ index fund. They buy one ETF, which is like just a big collection of stocks you can buy all at once. They buy one big collection of stocks that they can buy all at once, and their financial future's set. They're freaking done. And the reason they're done is because they leverage the work of others and the research of others to, find this higher calling and higher ability financial system for them that's going to allow them to just straight up retire or build real savings, get to their savings goals, whatever they want, because they just buy it, and then their money keeps growing, and then their money keeps growing. And then in the long term, there are downtrends for sure, but it overcomes that, and the money grows over that, and it just keeps growing. It just keeps growing. And then once you near your savings goal, once you near your retirement goal, then you start to, sell a little bit of it, just in case of risk, right? At the highs, you start selling at the highs, and then all of a sudden you start to realize these massive gains that come from your investing, and suddenly you sell 10% of your position, and that 10% was actually the exact amount that you started with, because the underlying fundamental companies that make up the indices that you're participating in, with literally no work on your part but to push buy one time on one specific date in very, very far past, or a date today that can be very, very important in the near future. You push buy on your computer, on your phone. You just push the button once, and all of a sudden the money, it moves out of your account, right? Say you buy, $5,000 in an index. Okay, well, there's your, 10% of your salary. I don't know, 10% of your month's work. It's whatever you do. And maybe that is a TV to you, right? Maybe you say, okay, instead of having this TV, instead of having this, thing that isn't really a huge deal in my life right now, that honestly, it would be worth more for me to invest in my future. Instead of having that very specific, an unrealized object in your life, you decide that, hey, you know what? I'm going to put it in the market. And so you just put it in the market, and then forget about it. Oof, sorry. Biking home today, but the chain broke, so did not bring a hex wrench, which was a big mistake. So we are walking today. Anyway, so you just put it in the market, and then it just grows, and it just grows, and it grows, and it grows. And the amazing thing is that after you've done it, you don't put any work in, but the companies that you invest in are putting in more work than ever. They're growing their workforce more than they ever have because they care so much about their shareholders, especially as they start to accrue values. They start to grow in price, and they're worth more and more and more. Now they have bigger shoes to fill in the marketplace, right? They got stuff to do for their shareholders because they have a reputation to stand up for, and they have shareholders. They're literally in business to serve their shareholders. The guy who started the company at this point is more than likely just another shareholder, a very large shareholder, likely, but all the interests of the public company are for the shareholders. And you are a shareholder the instant you decide that you're going to make an investment. And once you make that investment, it's going to change your life, because that's the investment. It's going to finally give you the freedom to go out and do whatever you want in the current state, knowing that you're saving for retirement, that you're building up that portfolio for when you want to get that boat or the car, whatever it is that you want to do. You have that covered because you're putting in this very, very minimal amount of work up front. And that amount of work is going to translate into so much more in the future, and strictly because you had the discipline and knowledge of what to do and when to do it. And it literally takes like 5 freaking minutes once you know what to do. You got to get that education, right? That's what sucks is, there's I think, it's a really high educational barrier to entry into finance. I remember when I started trading stocks, I was working minimum wage and I wasn't really happy with my situation, but I didn't really know what to do. And so I started researching, right? Like, what are stocks? How do I invest? How do you do this? And I remember I was working, after school every day, and then I'd come home and I'd just research stocks. And in the morning, I would just keep researching stocks, just keep looking up stocks, see what's up. And I did that for probably about half a year, right? I don't know if it was necessarily just me. I think one of the biggest influences behind that was like my boss was Mick. He just wasn't a fun guy, right? And it sucks saying that and looking back at it, but everyone I worked with, just kind of like not that nice to. And at the end of the night, we always report to Nick, and we could never really do anything. We didn't have control over our positions. And to give you a little bit of background on what I mean by this, I would get to Subway at like 6 a.m. And then work until like 8 p.m., which is totally cool, right? I'm not complaining. I definitely want to do that, but like no one else was there. It was just me for like 12 hours. And so with that, you'd think like you get a little control over it, but like literally every single time like anyone had a problem or anybody wanted to change the order or anybody wanted a refund for any reason, I would like have to get on the phone and call the Mick, and then I would get like a 5-minute, and it wasn't always like this, but like I would have to listen to him, tell me like, hey, Jack, you can't do, no problems, cannot do this, big issues in marketplace, and it just wasn't a very enjoyable experience. I'd hear all this stuff about like, yeah, don't do this, can't do that, and it kind of sucked because I always sort of felt like I was getting yelled at just for like trying to do my job, which is never, a good situation for whatever you're in, because you're trying to serve the people around you, but because of I don't know, however he felt the marketplace was, and this wasn't just me, right? Like I would train people and I would always work with people, and they sort of had the same thing. Like they were just, it wasn't a very fun time to work with him or under him as a manager. Just really not a nice guy to do stuff with, which sucked, right? It sucked, but you just kind of got to live with it and make it work, because there's not much else to do, or you can't really change anything. So you just keep doing it, and I kept doing it. And one of the strange things that happened is after a while, thanks, man. We were doing work and we were going hard with what we did, and one of the biggest problems was that there was just never control in the marketplace or with what we were doing, which sucked, right? Because, we were just trying to make it work, but it was tough to do, especially with the way we were treated. So as I started finding stocks and looking at these amazing new ways. Anyway, so as we, got around to, Christmas, it was probably like after 5-6 months of working there, I just kind of got a little bit tired of it. And then something really interesting happened with a lot of the people I was working with. They just sort of like started quitting. And it sucked because those were my coworkers, those were my friends. A lot of the times they would work with me, and I wasn't always working alone, right? I would work with other people, and we had a good time, learning great social skills and growing together. It was an awesome, awesome experience because we were one with each other, and that was really, really valuable. It was a really great place to be. But then, stuff started to get messed up because of having to work, this manager. People just weren't happy with him, and they started quitting. So, guys I would train, they just get tired of it and they would leave. And some people that started working there before me, same thing. They just kind of got tired of it and they would leave. And it kind of sucks, They weren't very happy with what was going on, and no one really was. It was a bad place to be, but at the same time, we were learning like how to not be a manager. We learned ways to not treat people. And, it kind of sucks looking back at it, but it was a really big motivation for me to start saying, hey, you know what? Maybe I should start looking at that stock market thing. Maybe I should start learning a little bit more about these opportunities in financial markets, because, you know what? That might be my way out of here, right? Because at the time, I was growing and growing and growing, but I started to reach a plateau with my social skills, which is what I was working on a lot at the time, was getting in front of people, being around people. I wasn't very good at that before. I was pretty, shy, lonely guy, and just not have it going for me. So that job was really great for developing that part of me, and I'm very, very thankful for it. But at the same time, it was just bad overall experience with what we were doing, which just kind of sucked. So people start leaving, and I decide that I gotta start looking at stocks more and more. So after work, before school in the morning, I would just research stocks and research stocks and research stocks. And I probably had like 4 hours a day, maybe 5 hours. So I would kind of squeeze some of it in between school. And so since it was between school, I could, in between classes, it's like 5 minutes of class changes. We would use 7 of those a day. It's like half an hour, 45 minutes if I try. So I would take all those class changes, and I would take everything that I could do, and I would just go for it, right? So instead of worrying so much about the opportunities that were here or there, or what I was doing at Subway, I would just get home and research stocks. And I did that, pretty much every single day for about 5, 6, 7 months. And it was interesting because at the beginning, I didn't know anything about this stuff. I was just like looking up really weird stuff about like what are stocks and how do I get into personal finance and investing. And I was looking for books on this stuff. I was looking for courses on stuff. And there were people that were in the marketplace that were trading every day, which was awesome. And they were like showing people some of the steps to day trading and how to do it, which was awesome. But there wasn't a lot of stuff that was like, hey, here's how to master your personal finances. Here's how to master your investments so that you can finally build real savings and retirements and create the financial future, whatever you want to forge, no matter your income, right? Using the power of financial markets and the American economy. So that's what I started researching. I started looking and growing with it. And then I realized, I was looking at people, and there were people that were making, hundreds and hundreds of dollars a day just trading stocks. And I was like, what? How's that happening? Right? So I started doing a little more research on that. And then I'm like, oh, so you have this thing called day trading, and they work with charts, and they have charts, and they look at their charts, and those charts tell them when to buy and sell stocks. So that was sort of interesting. But at the same time, it was basically just following what people were doing. Not a lot of insights or really great things to follow given the marketplace. So, just start researching, keep researching, got to keep grinding. And so after that, I just kept doing it. And I kept learning and going to, Investopedia, awesome site. A lot of really great guys on YouTube, Warrior Trading, Ross Cameron. Those guys were sweet, super influential. But they didn't really have, like the information, right? It was like, here's them doing it, but how do you get there? And that's sort of always what I wondered. And, at the time, I'm working at Subway. I'm like 15, 16, probably 15. And, I didn't have like $4,000 to drop on a course, right? I didn't have thousands and thousands of dollars to invest because I was just getting my startup capital by working. And you got to work your way there, which is exactly what I was doing. It just takes time. I was putting in all the hours they would let me. I worked, on the weekends, 10 hours a day. And then during the week, I'd do like 2 or 3 weekdays. And that was, pretty much all my time. Plus, it's just, school or whatever. And then just researching stocks, right? And then, my parents were separated. So it was a travel and a lot of stuff that sort of restricted some of the weekends. So I could do, 30, 40 hours a week consistently, but, it still takes time to get such a large amount of startup capital. Even though I wasn't spending anything, I wasn't like wasting my cash. I just didn't have the means to drop, thousands and thousands of dollars on a course to start learning personal finances, which I think shouldn't, be the thing that stops people from learning. It shouldn't be the thing that starts people growing into their space. And there are some good books on it at the time, definitely. Like The Intelligent Investor. I saw that and it was like cool, but like at the same time, I didn't know how to apply that into, the world or in the marketplace or into what I was doing. It's great to know that there are all these long-term factors that you can use to analyze stocks, but I still haven't read the book because you just learn that stuff by doing it, which is, probably should read it, but a lot of the things behind it are just underlying fundamental analysis factors. And a lot of those you just get by literally, looking up company name, annual report, and then you find an annual report. And after you have an annual report, you just freaking read it. And then you have a brief consensus of the company. But at the same time, like, you don't need to do that, right? With long-term investing in indices, which is something I found like no material on, like that stuff, it's not about, analyzing companies or spending, hours and hours reading 100-page documents. You don't have to do that to find financial security and long-term growth in the market, right? So as it kept going on and on, I started to realize that some of the biggest impacts and actual profit implications I found in the marketplace came from, researching what's called technical analysis, these trading patterns that I would just find all over the place online. And there were, thousands and thousands of these patterns that you could use, or at least hundreds. I mean, there's just a bunch of them. And people would develop them by day trading stocks. But then I learned that, like, I was able to apply those patterns onto long-term investments. So I spent months looking at, like, how these patterns emerged in investments because, I had school at the time. So I couldn't really, day trade stocks. It just wasn't an option. And because it wasn't an option, I had to move. And when you move, you got to make it happen. So, swing trading, long-term investing, swing trading just being like medium-term investments. That was when I had to go to because there just wasn't the time of day for me to do that on top of work or school, just because the market wasn't open, right? So the volatility wasn't there, couldn't trade 9 to noon, and that was that. So I keep doing this research and I'm learning about all this stuff that's really, really great, really cool stuff, but I wasn't really able to apply it, right? So I keep trying for months and months, and then I start to realize, so I've started to find the patterns out of the hundreds that I'd looked at. I started finding the ones that were applicable, the ones that worked every day. Not necessarily every day, but like every month, every year, over and over throughout time. Because those were the setups that established that strong financial basis for investments for me, because I was able to finally see the results in the marketplace. So I would see something like a head and shoulders setup where there's a high initial run up and then it goes down a little bit, and then there's a really high run up to the head. It's above the shoulder, and then it goes down to that neckline that was created by the first shoulder, and then it runs back up again to that first shoulder level, but it actually reverses down to the neckline, crashes through the neckline, and then it goes down to the height of the head to the neckline, or just from the start of the initial run up to the first shoulder. So what that meant for me is I could look at a chart, and all of a sudden I started to see these patterns like that emerge. And when you find those patterns, you can consistently trade them. And over in these longer term stocks, I started seeing these patterns, and I look at the history of them. I would just look at histories of stocks for months and months. And when I was looking at histories of stocks, I finally started to see that these patterns were working, With hindsight, I was able to see that they'd completed, and they completed correctly. And they've been proven in the marketplace based solely on the history of what happened, based solely on past performance of individual stocks. And those individual stocks, alongside those long-term equities and those long-term funds, were what showed me that, like, hey, you can actually figure out where a stock is going to go based on how its chart looks, as long as you have a strong grasp on the fundamentals and you understand the underlying investment. And once I realized that, things started to click really fast. I really started to like stocks, because all of a sudden you can predict where something's going to go in the future. And if you're right, and if you use the setups that make you right, you're making bank off that, right? And you're able to make money directly in the marketplace without a boss, without having to go somewhere to work. You don't have to go to Wall Street to be on Wall Street. You download an app on your phone, or you load up a web page on your computer, and you have instant access to the world's largest and most powerful financial market. And it's insane to think that people had to call brokers, they had to print out charts. I can't imagine how people invested before the internet age or the information age, because all this information just isn't there. And it was still really, really tough to find, right? There was not a lot of quality material in the marketplace that taught people, hey, here's the applicable steps on how to actually go from 0 to 100 in personal finance and investing. There were books, and there were a bunch of technical things that were super tough to get over. And those technical terms are great if you know what's up, but a lot of people, I didn't know what was up. I didn't know what some of VWAP, volume weighted average price. I didn't know that that meant that it was the average price of a stock in any given daily interval based off of the volume of the shares traded at a certain price level. What's that mean to me, right? I didn't understand that. And I don't think you can really understand that until you have experience in the marketplace and you see a stock that is going down and down and down and down, but then it hits that magical volume weighted average price. It hits that magical VWAP value. And that VWAP value is what ultimately bounces the price, so the price goes up, and then all of a sudden, instead of it going down, it goes up, and then it breaks out, and then it makes a new high day, and then lo and behold, it was actually an ABCD setup, and that's just another technical setup that, through time and ages, works consistently to bring people great profits with strong risk-reward ratios into the marketplace. And because you can find those setups and those patterns, those were the ways where I was able to finally find consistent profits, find consistency. And then I was like, oh, okay, so that's how these guys are making all this money trading stocks. That's how they're doing everything they do. Because before, it was like, dude, what? I don't know. That sounds really tough. How do you get into stocks? How do you learn that stuff? And through months and months of just constant research, I started to learn about, all these amazing charting patterns and techniques. And it's not just the patterns, right? You have to have that underlying fundamental understanding of what you're doing before you get into it. And you got to understand the stocks, because you don't want to get into a position that's just going to go, the company goes bankrupt. Like, that's not good, right? So there's definitely some of that underlying financial analysis, which is very easily established once you start just doing it in the marketplace. But the tough part is learning how to start doing it without, losing your shirt, losing your whole account with the trades. Because I know, just jumping ahead a little bit, one of my first trades, I liked computers a lot, right? So I'm thinking, okay, well, I don't know what a whole lot of companies are in this space. Of computer companies and how those computer companies would play out in the marketplace based on what I knew at a fundamental level about the computer industry and about competition in the space. And I said, hey, Advanced Micro Devices, AMD, they're doing some really great stuff that not a lot of people in this space were doing, right? They had this amazing chip that was coming out, and they were using it as a way to skyrocket the productivity. Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover, completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.